Rian wanted us to look at Italtile. Rian, I agree with you. Possible buy opportunity here. Our share is oversold on the stochastic. We've got confirmation of a positive divergence on the brink of changing that. We have actually changed that. Blue line has broken upwards through the orange line. And we've got a falling wedge formation. A beautiful turnaround pattern. Some might even see it as a possible pennant. Should that upper band change into a support, it can act as a continuation pattern, which means the rally that we've seen previously from year August 2020 all the way back to that high of 18 Rand 30 can be extended, assuming that upper band of the falling wedge or pennant changes into a support. And that is waiting at 16 Rand 57. Take note, Rian, how close that is to the 40-week moving average, waiting at 1635. It tells you the strong resistance that has to be overcome. Because remember, a falling wedge is made up of lower highs. So we've got these strong resistance levels that have to be overcome, where the buyers have to become stronger and push this share price to higher levels. Now we can see this week's candle is a strong, beautiful dragonfly candle with the long tail at the top. Even that low is a little bit higher than that low of the week of the 20th of September. So below 15 Rand, strong support. If we go back to this November, December 2020 range, we can see 15 Rand is a strong support that has to remain on Italtile in order to assume that the momentum to the top can continue. Now, at the moment, the other thing that we need to consider as well is Crystal, it's at its record high range. Is it not maybe risky, to buy a share here? But keep in mind, when a share is in a sector that is growing, that are reporting robust earnings, as technical analysts, we wait, we take our profit there, we wait for those pullbacks, wait for the shares to become oversold again, and then accumulate again for higher levels, assuming that those growth earnings and the growth that the sector is experiencing will continue. 15 Rand is that strong support, Rian, and that 1635, our red line, that 40-week moving average, is always a critical level that has to change into a support. Because if you look back, you can see how honorable the share was towards the 40-week. Look there, when it tested it there back in September 2020, when it remained a support, you could see the spike. When it could not change it into a support there, that resistance was so strong, the share experienced a sell-off. So it tells you again, listen, this is a strong support or resistance that one should take note of and not ignore. Akbar wanted us to look at the JSE Industrial Index. Now, Akbar, before we look at any index, we need to understand what is in it. So we know that with the JSE Industrial Index, we've got process at the top, then Anheuser-Busch, British American Tobacco, and Naspers. Those are the four heavyweights. So when we look at an index graph, we always keep the individual graphs at the back of our head. Now your question was, Christelle, on the daily graph, is there a deft cross formation between the 200 and the 50-day? Yes, there is. Akbar, you can clearly see that green line is breaking through that red line, which represents your 200-day moving average. And if I go back and we zoom to the history, we can see the golden cross, and remember that's the positive side when the shorter moving average breaks upwards, was confirmed, and it beautifully supported the rally that the JSE Industrials experienced. Now the deft graph tells us, listen, it's time to take profit, and that we can see further sell-off should the momentum to the bottom continues. But I want to take you back to a weekly graph, because you don't trade unless you trade the futures. It's important to look at the weekly graph for a long-term view to say, hey, what am I going to do with my shares in this basket? So obviously I have to change this then to, I'm looking at weekly graph, so that needs to go to a 40, and let's take that green one off because I want to show you something important. We've got a double top formation on the JSE Industrials on the weekly graph. What does that mean? It's a warning formation, just like I explained to Harvey on the PayPal graph. Double top formation tells us, listen, if this full target plays out, and I'm taking the right part of the double top formation, projecting it downwards from the neckline, meaning this index can go back to 82,000. We are already below that 40-week. So the whistle has already blown for long-term investors towards this index to say, hey, the long-term sentiment has changed to positive. Now, it doesn't mean nothing just falls in one line. So the important thing is, yes, we are in oversold territory. So that means that index can easily bounce. Yes, we can see, and I'm going to highlight it for you, that this low is a little bit higher than this low. So higher lows are visible, telling us somebody is buying the dips. Now the question is, can I change that resistance into a support? Or can the index do that? Or the informed capital, the big money, can they change that resistance into a support? And then the next one, and then especially that 40-week moving average. On a weekly Friday close, if you see that those levels start to remain resistances, you need to make a decision on a Monday morning what you are going to do. So we can obviously go all the way back to that resistance, change it into a support, and the optimism will and can easily continue. However, if we start to see these bounces come back, a bounce, and that bounce is not as high as the previous bounce, come back, you need to take profit in the rallies, because this double top formation is telling us, listen, we can see this index a lot lower. If we've got time, I hope we can maybe look at the JSE resources index, but the same principles applies, exactly the same. All right, Leon wanted us to look at Uber. Also listed on the US exchange, obviously New York Stock Exchange, a favorite amongst the technology lovers. And I mean, in that week of the 20th of September, the share spiked about 17%. We've spoken previously about this inverse cup and handle formation. We saw the pullback. But at the moment, Leon, we are sitting with a stochastic on a 61. That is in a mid-zone level. And that's not where we want to make our decisions whether to buy or sell. Assuming you listen to our programs and you know that the best place to buy a share is when it is oversold and there's a positive divergence, you should already own the share. So now the question is, Christelle, where do I take profit, or how long do I hold on to? The stochastic within, the two lines within the stochastic are still pointing upwards. It tells you the momentum to the top is still in place. Yes, the share has found resistance for the last 3 weeks, almost at the same level. That is a little bit of a concern, because it tells me, hey, every time the share reaches that resistance, there is not enough buyers to push this share higher. Because remember, it's only the buyers that can take the offers higher, and in other words, make sure that the share price goes higher. If there are not enough buyers to take it maybe back to that 40-week moving average, and this stochastic becomes overbought year around 80, that might be your time to consider taking a profit. So I don't know exactly where you got in, but at the moment, the momentum to the top is clearly in place, and that strong resistance that needs to change into a support is waiting at $47.43. Above that level, we can assume that, hey, we can maybe go back to that 40-week waiting at $50.52. Ishmael wanted us to look at TenCent. So obviously after the pullback, a lot of investors were saying, listen, let's buy the dips. I mean, TenCent is trading at such low levels. But from a technical perspective, what do? We've spoken previously about and warned about this head and shoulder formation. And we know it can take TenCent back to around 355 Hong Kong dollars. It doesn't mean it has to go there, but that is the possibility should that full formation play out. But let's have a look and interpret the candles to see. We can clearly see what the informed capital thinks. This support they've had in the last 4 weeks is a little bit higher than this support that is seen as positive. I've got a stochastic with higher lows in it and a positive divergence that is seen as positive. But what worries me a little bit is this long again, gravestone doji candle. That long tail at the top tells me that resistance levels, and it just went to close that window. That resistance level is a strong level to overcome and to make sure that there is enough buyers to take the share higher. So technically, we should either wait for $480 to change into a support, because that's where my strong previous resistance is waiting, or that high of $529. The fact that the buyers only went and closed that window and started immediately to become weak again, and the sellers took over, is seen as negative. So I would nibble on it should you want to, Ishmael. I wouldn't, I would be careful and be aware that you are still sitting with this massive head and shoulder that can take 10 cents possibly lower. Obviously, as I've said, that strong support 440 Hong Kong dollars and 420 Hong Kong dollars. That is the foundation. That is the base. That is the support. That is the floor that has to remain in place, assuming that we can say, hey, as long as these levels remain a support, I can maybe see higher levels on TenCent. Christine wanted us to look at Facebook. Everybody knows what's down this week, and the sell-off clearly what did not only happen this week, but we've had, there you go, before this week, we've had 3 negative candles, and the name of 3 negative candles consecutively is called 3 black crows. And that normally tells us, hey, at some stage, after 3 sessions, the buyers are starting to get in and they will protect the share, which they have definitely done this week. We can see with this long tail, the buyers came in, they bought the dip, and they started to protect the share price. Now, the warning, if anybody uses candles, has already been with that tweezer top. That tweezer top where after the rally, where a level of resistance was found for 2 consecutive candles at almost the same level, was the hint, was the whistle blow to say, hey, $384 cannot change into a support, and below that low of 370, we can see a turnaround in Facebook to lower levels, and boy, oh boy, did we see a turnaround to lower levels. So now the big question is, can the buyers continue to protect it above $335? That is the level that needs to change into a support. Take note, Christine, my lines on the stochastic are still pointing downwards. Do not try to catch a falling knife. Wait for the share to stop making new lows. Wait for it to start to consolidate. Find a proper decent base to make sure there's enough concrete in that buying floor before you get in. And that confirmation of optimism will be above $335. And I will use my 40-week moving average as the protection, 318. Below that level, the warning will be on the table. And you can again see how this moving average was honored time and time again in the past for Facebook. So below that level of the 40-week, 318, do not disregard the warning that will be on the table. Don't forget to send through your questions for next week's show. Have a fantastic week. Take care.